All right, just one last look at disclaimer for everyone. All right, so you were going to talk about the threshold list to start?
Yeah, let me share my screen here. And I'm going to come to the threshold list. So over here, this threshold list. And we kind of started just discussing what these symbols on the threshold list mean. And the threshold list deals with stocks that are borrowed and shorted in the market. And the way to short a stock, if you wanted to go and sell short a stock, means you don't own the stock, you don't have it to sell, but you want to sell it either because you think that the stock price will go down, or you need it as a hedge. Let's say you bought an option like a call option or did a future trade baskets. You need to sell it short as a hedge. Again, this may be something else that you have in your portfolio. Now, to sell a stock short, you can't just go in there and just sell short a stock that you don't have possession of, right? So you need to somehow the stock has to exist somewhere, and you need to borrow it, and then the person who owns it lets you borrow it, and then you could sell that stock. But it's tagged sell short because you don't really own it. The other person still has a claim to it. You have to give it back, right? So if Will owned the stock and I wanted to short the stock, and Will said, well, I'll let you borrow my stock, just give it back to me at some point in the future, and maybe I have to pay a small fee for it. And I'm like, great. So then I borrow his stock and sell it. And so when you sell short a stock, it's called like a locate. A locate is in regulatory terms is that if in your account you have a position sold short, well, locate means where did you borrow it from? Locate the place that you actually borrowed it from. This happens with your clearing firm. So you don't actually go out there and find, knock on people's doors and find it. The clearing firms do that because they hold a lot of stock in street name. But an issue could come up where the demand to sell short exceeds the supply available, right? So if you have, people out there who want to sell, 1 million shares short, but there's only 500,000 to borrow, it becomes like a hard to borrow situation. Or there just might not be a lot of stock available, maybe not a high demand, but there's also some demand, but no supply. There's nothing to borrow. Sometimes stocks have low floats and somebody needs to short a stock for a hedge or whatever reason, but there's just simply no stock available, to lend out, right? And so that will create a situation where there's, stocks become either hard to borrow or where stocks are shorted. So let's say that people did borrow stock, they sold it short, but the people who lent it all of a sudden want the stock back. They want to sell it, right? So if you no longer can borrow from that person, you need to borrow from somebody else. And if you can't borrow from somebody else, right, and that person needs their stock, well, you fail to deliver it, right? So like for example, let's say Will lent me the stock, I sold it short, right? And then if Will needs the stock back, let's say Will needs the stock back, well, either I buy the stock back and give it to him, or I have to borrow from somebody else. But if I wasn't able to do that, well, I failed to deliver the stock to him, right? That was a failure. And that becomes an issue because if you fail, clearing firms fail, and I think they have certain, I don't remember, the rules always change. So whatever it is, the rules are changing, but they have a certain amount of time that they have to find the stock or cover, right? So they might have some leeway there, especially there are certain designated players that are able to sell the stock short to meet their obligations, like as a market maker or specialist, where to ensure an orderly market. Sometimes the specialists and market makers, they'll need to make a two-sided market and sell short as the stock's going up, right? But so they have that obligation, but if they can't find the stock immediately, they can't meet that obligation. So there's certain rules and leeways out there, that allow certain people, you can sell it short, but you still have to go and borrow the stock. You just have these exemptions, sell short exemptions, that allow you to sell it short before you locate the stock. All right. So look, the rules are always changing, but that's like what it is. I don't know what the time, if it's 2 days, 10 days, whatever. So what happens is when there's a fail to deliver, right, it makes it onto this list. And how long has it been on the list? So over here, like you could see here's an ETF, VTEI, right? So you have this VTF, Vanguard Managed Funds. And you can see here that the shares outstanding is it's low, 1.9 million. So there's not like a lot of outstanding shares in the first place. So if they're owned by certain institutions or whatever that just don't want to allow it to be lent out, right? They say, okay, well, I'm not holding it in a brokerage account that's in street name that I agree to that they could lend it out. I want to own my stock. And, if I either don't want to lend it out, or if I'm going to let you borrow it, I'm going to charge my own fee for it, let's say, right? Because think of it, if you own a stock and you let somebody borrow it, it's like when you own a apartment, like a condo. Well, you could rent out your condo, but they're borrowing, right? You're going to take it back. So you're like renting out your stock. Think of it this way. You're renting it out, or you're letting somebody borrow it for a fee. And so sometimes, there are institutions like a mutual fund will demand their own rate, to lend out. So in this case, there's just not there's not a lot of shares outstanding. And it might be a case where a market maker is making a two-sided market and there are more buyers than sellers. So all of a sudden now he's got this imbalance on his book, right? So even though he might be hedged by selling it short by buying something else, he's still short this security. And if you're short it, you're going to have a locate. You have to say, this is where I'm borrowing it from. The clearing firm will do it, but they have to point to it by regulation. And if they can't do it, they get on this threshold list, right? The threshold list is saying that, where you're failing to locate. Where's the stock? You have 10,000 shares that you're short on your books. Where are you borrowing this from, right? And if it's on a threshold list, it's going to hit that fail to deliver. You're going to have to cover, so you have some leeway here. So here we detect how many days it was on there. This one was 5 days, 7 days, 2 days. And in this situation, when it's on that threshold list, it doesn't necessarily mean that it's always the same institution failing to deliver. Like maybe, today let's say Merrill Lynch is on there, and then all of a sudden they find it, but the second day, Goldman is on there or whatever, so this just shows how many days it hits that threshold list, okay, consecutive days, where it's basically pointing to that there's difficulty finding stock to lend out. And a lot of times you'll see these in stocks that have very low floats or outstanding shares. It's just not uncommon, because even a small position, a very small short position, can hit it. See, you got, there's less than 1 million shares outstanding in this one. Some of them are 3 million, even 53 million. It's not a lot of stock out there in the first place. So the amount of stock available to borrow could be very, very small. So that's what the threshold list is. I mean, let's take a look at one that maybe has a lot of outstanding shares. Let's see if that. So here's one, solar. This has 420 million shares outstanding, 394, float. But the stock price 24 cents. So whatever it is, that's hitting that threshold list. So there's a lot of stock there that's outstanding. But if we put it in perspective for something that's 24 cents, it's not, in dollar terms, probably, a lot. You see it's a market cap of 102. 77 million. So far on this list, nothing really looks unusual, right? It's not like we have a stock like, I don't know, like Apple or Tesla. That would be something like to really consider. Why is something with so much shares outstanding, such a high market cap stock, hitting this list? So just sorting this list from, even high to low doesn't. We could do it by market cap. Let's see that. So here, 667 million shares. Market cap is not that big. So far, just looking at it, nothing crazy, nothing unusual. This is what a threshold list typically looks like when I look at it. Now, another thing to look at is if the number, since this isn't showing anything unusual, maybe the number of stocks on the threshold list can be increasing. So what we're seeing here, okay, is the number of securities that are hitting the threshold list. If we typically see 50, 60, okay, what if that jumps to 200, 300? Well, that could be something also interesting maybe going on, where why is this increasing? Are people all of a sudden feeling more bearish in the market and starting to short things in other places? So is that happening? And here we have this blue line. That's the daily amount of stocks on the short list. Okay, that's the count. You can see here we have right now, what's that? Let me see, 50 stocks on that hit our short threshold list. And if we look at it from history, or even the 90-day moving average, which is this green line, it's kind of in line, right? If you have less, you could see here, like kind of the market is going up from here, but you could see that the number of stocks on the threshold list declined by a lot. Here, June looks like an increase, but even then, I don't think this is a huge spike. It looks like, maybe the variance increased a little bit from back here, where it was very close to 50. Over here, maybe it's a little bit higher variance, but it's not something to be like, whoa, like that's impressive. Didn't fall to like 10 and didn't like jump to 200. So these are the things that we're just putting in there to spot something that may be unusual, right? The number of days on there, the number of outstanding shares. This shows the percentage of days it was on the threshold list in the last month, in the last 6 months. So what is this? It could get on the threshold list, then it could come off, then it could come back on. So then we count, okay, besides consecutive days, how many days has it been on the threshold list in 1 month? How about in 6 months? Is it constantly, hitting that threshold list? So this is the percentage of the days it was on there, right? So that could be also something to look at if something unusual happens. Like, let's say you have a big market cap stock and it hits your threshold list, and you could check and say, well, is that unusual? Is that unusual? Like if you see like zeros, right? It doesn't typically make it on there, right? What happened? Maybe, what it's keep in mind, we're trying to look for something that's like unusual, not typical. Like what is the story behind it? Like if you have a big semiconductors stock, all of a sudden it makes it on there, has a lot of float, and you see it's not even that usually doesn't happen in that stock. That's maybe something that you want to look into as well. What's going on in there. So that's the idea behind some of these statistics and some of these historicals to help point out something unusual. And this here, we also just show you quickly the performance of the stock. So if you wanted to just relate maybe something in a stock that's happening that may have price wise, something performance wise unusual may be happening, that you could correlate it with the threshold list. So, well, I think I'm going to probably stop it there.
Yeah, that was great. We did have some questions. I know, I know you don't know exactly any of these, but in some accounts, I know they do pay. Rob was asking, do brokers give any fees for lending out the stock in your account?
So some brokers may. It could vary by brokers.
Well, certainly the brokerage firms are getting money for it, right? So they may, when you sign up in your account and open an account, part of the deal may be that your stock is then lendable by them, in the fine.
Exactly. So one of the ways that the brokers generate revenue, right? How do they? There are different ways they generate revenue and income, because right now where you're at zero. A lot of them are charging zero commission. They don't charge you to hold your account, right? So you could go in there and buy a bunch of stock and hold it in your brokerage account. But why would a brokerage firm even do that? Because for them, they have to maintain that account. They have regulations. They have to provide you with reports and all this stuff, right? So it's like, well, why even do that service for somebody? And it's not sustainable. You need like, think about it. You need customer service. You need regulation. You need to pay for all these fees, like to maintain that account. So why would a broker do that? Well, they have to generate income somehow. Like let's say you bought a stock, you bought a bunch of stock, whatever, and you're holding and you don't do anything for a year or two, right? So they can't generate any commissions if you're not trading. So what is one of the ways they make generate income or revenue? Just like a bank, like if you deposit money in a bank, what does the bank do? Well, they lend your money to somebody else and generate interest. They generate fees, right? They need to lend it to somebody to generate fees. Same concept kind of with brokerage firms. Well, they're holding your stock. They're not charging you. So they need to generate income. They need to do something. So they lend out your stock so they could generate fees and income and revenue. Right. So it's just that's one of the ways they ways that they generate income. Now, a bank, sometimes they'll lend your money, but they pay you interest as well, right? Like maybe they'll lend you deposit money, they lend it out, let's say whatever, 5%, and they'll give you 3% or 2%. They make that spread. Certain brokers may do that and share the fee, that they generate from lending out your stock. So but keep in mind, brokers are different. So you would have to go research it and and make those decisions on yourself. But it's kind of like going to a bank. Certain banks, you open an account, they'll pay you 0%. Some banks will pay you 1%. Some banks might pay you 3% on your savings deposit. So it's something that you would have to research.
We did have another question. I know this is, obviously we don't give financial advice, but it is an interesting thought. The Chameleon is saying that it's taken 10 days and they still haven't received he's wondering this conversation. He's wondering if his broker lent out the stock without their knowledge, because they've been trying to sell it for over 10 days and they keep giving them excuses why it hasn't been sold. Could this be one of the reasons? That seems like super sketchy, right?
That seems sketchy. Yeah, I don't know the answer to that. That
keep your records on that, and you may want to.
Yeah, that seems
talk to a supervisor. Or,
That I don't know. That doesn't.
Either way, I mean, just because you're short, just because they lent the stock out to someone, you have all the rights to sell the stock. Now that is then there's 2 days or whatever the clearing process is, but the money should hit your account within a couple of days to be able to get out.
I don't know what the situation is there. I don't know all the details, but if you should be able to sell your stock. I don't know.
That's moving up the food chain in the organization, or going to the SEC or something. That seems.
I don't know. Look, we don't know what the details are, Will. So
I don't think that's true.
But we don't know all the details or what's going on there. Just in general, you should be able to sell your stock. I don't see why you wouldn't be able to.
Yeah, 100%. All right, D, great job as always. Thanks for everyone for joining. Have a great day. We'll see you tomorrow. Thanks, D.
All right. Yep. Thanks, everyone. Stay safe out there. Have a great